Alright, so today's topic is budgeting. Special thanks to Robert Kiyosaki and David Bach for helping me form this opinion on budgeting. In these hard economic times, we know that families are struggling just to get by. And I know things are rough and times are hard, but by making things a little bit simpler and understanding the way money flows in your cash flow statement, you can begin to take control of your life. I like to use a whiteboard at home. Okay, it helps modify the cash flow sheet that I have at the bottom of the page. I also have it in a spreadsheet so that you can plug in numbers and see exactly where you're at. It does all the math for you. You don't have to worry about anything, just plug in the numbers. So if you're interested in having that spreadsheet, my email address is hernan.sias@gmail.com. Drop me an email and I'll send you that spreadsheet. It's in Microsoft Excel, so you're going to need that program to see it, but other than that, it's a tool for you to use. I'd like to start off by talking about income. Income is any money that comes into your cash flow statement every month, whether it is earned income, which is at your job, you have investments, either businesses or real estate, right? Any money that comes into your pocket every month is considered income. Alright, then we go down to expenses. Now I break down my expense column into two different columns. I have recurring debt, which is bills that you have to pay every month, regardless of whether or not you can pay them off. For example, you can't pay off your rent every month, you can't pay off food, you can't pay off gas. Every month you're going to have these expenses until the day you die. Your bad debts, on the other hand, those can be paid off. Now they're not bad debts because they're evil, they're just bad debts because you have to pay them off. You have to work to pay them off. So if it takes money out of your pocket, it's considered a bad debt. If it puts money in your pocket, it's considered a good debt. We'll get into that a little bit later. So you add up your total your bad debts and your total recurring debts, and it'll give you your total expenses. Okay. Now on the next line you have cash flow. The difference between your total income and your expenses equals your cash flow. So if you are expensing more than you're bringing in, your cash flow is going to be a negative number. If your income is more than you're expensing, your cash flow is going to be a positive number. Now, true success is determined on what that cash flow amount is and what you're going to do with that cash flow every month. Are you going to just blow it and go out and party, spend it all, or are you going to start investing in yourself, investing in your asset column? Now, under that we have what's called a balance sheet. Now a balance sheet basically says what assets do I have and what liabilities do I have and how do they balance out. Okay, so if an asset column is money that puts money, or something that puts money in your pocket, or something worth value. So your savings account, it is not costing you anything to put it in. So if you have money in your savings account, it's considered an asset. If you hold stock, now stock is kind of tricky because it has a fair market value, and in today's times that could fluctuate within the day, right? But the number of shares you own and your purchase price, you list that in your asset column because there's some value to it. It's not at zero. Hopefully it's not at zero. If you have a rental property, you're going to list how much equity, which would mean basically how much of a down payment did you put down on that property. So if you bought a house that's worth you bought it $100,000 and you put $10,000 down, you'd write that in your asset column. Let's say it's a 3-bedroom 2-bath home, it's $100,000, $10,000 down payment, because the $10,000 down payment, your equity in that property, is what is your asset. Now you slide over to the liability side. In the liability side, you would write off things that you're liable for. So for example, if you have a credit card, you have $5,000 in credit card debt, that amount of money that you owe them is considered a liability. If you have a school loan, the amount you owe them is a liability. A car loan, same thing. Now let's talk about that. If you have a savings account, you don't have any money in your liability column. There's no liability attached to it. If you own stock, you're not going to go negative. You can lose the value of your stock, but you're not going to go negative, so there's no liability. Now on the real estate aspect, remember that $100,000 property had $10,000 in equity, so that $10,000 is an asset to you. The mortgage, which is the $90,000 that the bank financed you, you're liable for. So you'd have to balance out that property as far as what's an asset and what's a liability. So $10,000 of it is an asset, $90,000 of it is a liability. Okay. Now I didn't list that in this cash flow statement, but that's the way you would list a property. So the difference between your total assets and your total liabilities, so you say assets minus liabilities, it gives you a number. Sometimes it's a negative, sometimes it's positive. That number is what your net worth is. Okay. So once you got that down packed, it's basically a simple mathematics to figure out what your net worth is and what your cash flow is, and that'll tell you exactly where you're at every month. You'll be able to visualize and see, whoa, what am I spending most of my money on? Where's my money going, and what can I do to change that? Now, David Bach wrote a book called Automatic Millionaire, and almost any financial author you read will always tell you about paying yourself first. I'm sure you've heard that time and time again. Pay yourself first, pay yourself first. The problem is not paying yourself first. The problem is making it either making it automatic or doing it at all. See, most people get paid, pay their bills, and then whatever's left over goes to their savings account. Pay yourself first means when you get paid, you put money into your savings account, then you pay everybody else. So David Bach talks about this in the Automatic Millionaire, and he says to make it automatic, use today's technologies like direct deposit. Automatically have your payroll send 10% of your payment either into your 401k, your IRA, or into a savings account. Automatically, before you even get what's left over, that will be set aside, and you'll start paying yourself first. That 10% or whatever amount that you put away, it's really going to add up, and over time you're going to see that that money will increase, and you'll never really feel broke anymore as long as you maintain that account. You'll always know there's a safety of money there put aside in case something were to happen. Most financial planners will tell you to put 3 to 6 months of liquid cash into an account in case something happens. That's a good bet, that's a good start. And then after that, you might want to start investing money into your asset column, the way the rich actually become rich. So I'm not saying get started with 10%. Maybe you might want to start with 2%, 5%. But you'll notice that if you take $1 and you were to take a penny from every dollar, 1%, or you take a dime from every dollar, that's 10%, you can still do a lot with that 90 cents. So I do recommend David Bach's Automatic Millionaire. He'll teach you to make saving for your future automatic. Now that is the long way of investing, I'll tell you that much. It's safe, it's easy, there's nothing to it. You set it up and you forget about it. So if you plan on working for the next 30 years for different companies, that's the best way to save for retirement. If not, keep going with some of these blogs, because I'll show you different ways of investing. Different authors show that would help you make that transition a lot faster. We'll talk about wealth and other blogs, and how to take that cash flow and turn it into a real retirement account. So if you have any questions, feel free to send me an email. Remember, if you want that spreadsheet, go ahead and send me an email, and I can personally consult with you over the net, over email, or over blog. So feel free to give me an email. Again, it's hernan.sias@gmail.com. Thanks, and catch you next time.